This is the most dangerous time in our nation's history in many decades. We're in a fiscal place, and no Treasury Secretary has really had to deal with what's about to happen. This ridiculous explosion of spending, no end in sight, and no one to buy our bonds.
In this interview, venture capitalist Mark Yusko discusses macroeconomics and how crypto is the only safe haven for your money. Mark begins by explaining that in the short term, things will be relatively smooth, with long-term fears in the background. He immediately draws attention to an increasingly likely scenario that could completely flip the narrative and cripple the economy. The scenario in question is a full-scale attack in Rus-Ukraine, or a large Middle Eastern conflict. Both wars would significantly affect major oil-producing nation-states, and Mark explains that contrary to popular sentiment and even historical evidence, this could result in a calamity. In addition to the possibility of a potential war is the problem of long-term bond issuance that the United States is currently facing. Mark explains that there is already enormous strain on the dollar caused by excessive printing and what he calls sober sailor spending. This strain is evidenced by the fact that he is struggling to sell long-term bonds. Long-time buyers like China and Russia have all reduced buying. All these problems are leading us to a critical point which Mark predicts might be somewhere in the next 3 months. Let's get into it.
I think inflation has peaked. I think we're heading back down with one caveat. If this skirmish, well, it's fine, we'll call it a war. It's not a skirmish, it's a war. It's a full-fledged war. But it's in a small area. But if it expands to the region, oil prices go up a lot, like a lot. And if that happens, inflation short-term goes up and economic growth comes crashing down. And in that scenario, I think your point on Janet loses control and she gets stuck trying to thread that needle, and people call bullshit, and we're at 6% on the long end in 5 heartbeats. Most people believe, and I think that's why wars are started, that war's good for the economy, it's good for stocks, it's good for GDP growth. Well, it definitely is good for defense companies, it's definitely good for auxiliary businesses that support the war effort, and historically it has been good for GDP growth, and historically it actually has been good for the stock market. I fear in this case where an expanded Middle East conflict would have such a deleterious effect on oil in a time where oil's still really important and where, we don't have the strategic petroleum reserve and all kinds of other challenges. I just think it would catch people off sides, and I think we'd end up with a 2022 kind of redo. I could see a down 20% in equities easy. You'd lose at least that in your long bonds, maybe actually you'd probably lose more like 30%. It'd be ugly. And the other problem is liquidity dries up, right? Because you got this commitment, to shrink the balance sheet. Well, I think they'd have to throw that out the window. I do. Because at the end of the day, there are no buyers. So the buyer last resort has to be the central bank. And that, my friend, is what Paul Tudor Jones said. That'd be good for gold and good for Bitcoin. And I love it. I like Bitcoin. For the people at the bottom, it's not good. It's really not good. For the people at the top, they don't really care. They're good. The people in the upper half, they'll be fine. It is really hard for the people at the bottom. And look, we've all seen pictures of the Great Depression, the bread lines and the Dust Bowl. And for the people at the bottom, it's super hard. And if you look at the pictures of London in the 1860s, right? The people at the bottom, the Tiny Tims and the Christmas Carol story and all that, it's hard.
So far, Mark has explained how a war, especially in the Middle East, could be a significant problem for the United States. He touches slightly on the long-term bonds and how even though they're currently up, he believes they'll perform poorly in the event of a war. Mark explains that the people in the top half of the socio-economic chain will probably survive, but that the people will suffer heavily. Next, he shifts gears to talk more about the long-term rates and the 2 reasons as to why they rise. Then he finishes by reminding us of what he's been preaching. Buy crypto to protect your wealth.
One is good, one is bad. The good is when it's rising in anticipation of solid recovery and faster growth. We love that. The other is not good. When a central bank loses control, and you've seen this happen around the world many times, it just hasn't really happened in the US very often. When the central bank loses control at the long end, that can get ugly fast because so many people depend on treasuries as their risk-free rate, as their base rate. And here's the thing, there's actually a bill that wants to destroy one of the marginal buyers of treasuries. They want to outlaw stablecoins in any permissionless blockchain. You need to protect your wealth, which, wait a minute, somebody else said that recently. Larry Fink said, you might want to buy my Bitcoin ETF when it comes out to protect yourself against devaluation of the currency. Larry Fink, who called it an index of money laundering 5 years ago.
In this video, Mark Yusko has shed some light on some lesser-known problems of the macroeconomy, like the potential negative effects of a Rus-Ukraine or Middle Eastern war and the struggle to issue long-term treasury bonds. Experts on the subject explained that the US hasn't had a major auction since 2022 Q1, and Mark's stance on the matter is that even though things seem okay or even good now, we're approaching a possible inflection point that will shake society. He recommends and strongly believes that the US will perform a debt jubilee similar to 1840s England and rise stronger from the ashes. But there's a lot in the way of that. One thing is for certain, cryptocurrency and assets that maintain value, like gold, are important as a store of value. To see the latest in crypto news, watch this video here.